Hey guys, Tex here, welcome back. In today's video, we're going to take a look at a live trade that I executed on Tesla, locking in just over $600 in only 30 seconds. Let's get started. All right guys, so first of all, starting out with the daily chart on Tesla here, we saw a pretty big move yesterday. One of the levels that I was talking about in the weekend watch list video was the $695, kind of $700 level because of the price action that we had here curling back up over that. Plus it's, you know, your 700 whole dollar, very significant support level that I figured would come into play. However, yesterday we ended up opening with a massive gap down on everything. And you can see that Tesla actually sold off right into this 100 SMA here before it found support, and then a massive rally off of that. So yesterday was a bit of a frustrating day for me because of the fact that I ended up getting out of a position here on Tesla way too early. I didn't necessarily expect it to bounce as much as it did, but boy did it ever. I took a trade a little bit before this 100 SMA and took a loss on it, and then I tried a second stab into the 100 SMA. Ended up working out, made back my loss plus some extra. So, you know, I only made like $100 on the day because I lost about 300 on the first trade and made it about 400 on the second one. But what's frustrating is that I told myself that with this massive gap, you know, the odds favored that there would be some type of corrective move. When you have price that imbalanced, opening that much out of balance, I mean, with massive gaps between, you know, your moving averages and everything, it made sense that it would bounce. So I told myself, you know, it was time to be aggressive, and I wanted to take more contracts on Tesla. I was going to try to take 3 contracts, but I was a little bit gun shy because honestly, I've been having a lot of trouble in the market lately. So I don't want to sit here and make excuses. The simple fact is, this is my own fault. I did not get aggressive like I should have. I took one contract on both of the trades, and so when I ended up locking in profit on the one contract on the second trade, I was able to make back the loss plus some extra, but I didn't have anything left to run with for this potential move. But a really big monster retrace right back up into that 695 level plus a little bit extra. So really solid day for anyone who did catch that bounce on Tesla yesterday. But for me personally, I had a lot of FOMO from it, and I kind of had to ask myself, why did I feel so much FOMO yesterday compared to any other time? And I realized that it's because obviously, you know, I've been struggling a little bit. Like, I'm green, but I'm just not making as much money as I would like. And so, you know, disassociating yourself from the money has been more difficult. And even just, you know, getting good trades where you get good follow through on trades has been difficult. And that makes it even more frustrating. Then on top of that, we were struggling with a winter storm, and I lost some trading days last week. So just in general, the kind of like a pile-on effect of the emotions really hit me pretty hard yesterday. And so it was really frustrating to see that I left so much on the table. So coming into today, I realized that I needed to be aware of that and not necessarily come in trying to swing for the fences. But if I did see an opportunity to really pounce, kind of learn from the lesson, and I was able to come in today and, you know, kind of make up for that. So that's good. I definitely needed that. That put me up a little over 2,000 on the month, so not anything significant. This has been a difficult start to the year in terms of, you know, where I'd like to be, but I'm green. So honestly, I don't have that much to complain about. Now, moving on to today, where we were opening was very key because I talked about in the weekend video about the 695 level, again, being so important. We were opening just above that. So I kind of posted in the chat room, look, that 695 is a very important, very key level to watch on Tesla. So for myself, what I was looking at off the open was that if we could get a dip into that 695 level straight off the open, especially with speed and distance, that would be a prime opening range scalp setup for me to buy some calls and look at just scalping, you know, a bounce off that level, and then maybe leave one on to see if we could get an opening range breakout, or otherwise look for a second entry for that to happen. And it ends up doing, you know, obviously in hindsight, you can see it's working beautifully right now. The other idea was that if we don't dip and we hold and we go for like a quick 1, 2, or 5 minute opening range break to take that, and obviously I'd be looking for a much smaller move on that, especially that early in the morning. So the latter is what happened. If we hop over to our intraday chart here, let's go to a 1 minute time frame here, and we'll get back over here to the open. One thing that I'll kind of point out is that you had you had pre-market high quite a ways away. So pre-market high was sitting way up here around 732, and your pre-market low was down here around 706 or so. And this is, you know, the pre-market low was hit very close to the open, where we kind of bounced off of it right up into the open. So we actually opened, let's see, we actually opened right here in this area around 712. So again, what I wanted to see off of the open was ideally was a pull down into this 695, because that's a long ways away. That should give us some good speed and distance for a super high probability bounce off of a very key level. Otherwise, if we end up dipping and just holding like pre-market low, for example, and we come back up, you can see that the prior day's high is sitting right here. This kind of, it's a little hard to see, but this pink dashed line, this is marking your prior day's high. So if we dip like in the pre-market low and hold that, and we keep holding and we look to break out on a quick opening range breakout, like a 2 or 5 minute opening range breakout, then that's also a trade I want to be involved in. So again, the idea was to either look for that quick opening range break or a pull down into the 695. So you can see that obviously what happened is we did exactly that. We dipped into the pre-market low right here. We held the second 1 minute candle, consolidated just underneath of that prior day's high right here, and then boom, we get the breakout move. So you're going to see the video where I jump in on the breakout move and I scale out on this move up here. I was not greedy with the position because I figured that the move all the way up to your pre-market high was not likely to happen without some type of a pullback, especially that early in the morning. And that just goes to show that if you take an early breakout, like in the first 5 minutes, you don't want to be greedy with it. You want to be quick to take your profits, because the odds favor that it will probably have some type of pullback if the distance is too far. And in this case, that pre-market high was really kind of too far. So playing off of that breakout in the price action, you'll see where I got in and how I watched the premiums to sell into the move, and actually by selling on the ask. So we'll see all of that. And then at the end of the video, I want to come back and talk about this trade off of this 695 level that I didn't take, but I was posting in the chat room with the guys and really trying to explain to them why they need to take that. You just take it into the level and it either works or it doesn't. So we'll wrap up taking a look at that. So let's jump into the live trading video now. All right, so here we are. The market is opening here. You'll see that I have Tesla's 1 minute chart pulled up right here. And then I have other stocks over here on the right side that I'm kind of watching. I have the 700 calls pulled up because I'm thinking right here that if we dip into that 695 level way down here, the 700 calls would be good. If we do a breakout, an opening range breakout from here, the 700 calls would also still be good enough. So obviously you're going to be looking at calls that are pretty much right at the money on the dip into 695, or in the money if I take this opening range breakout, which is obviously what we end up seeing. Apologize, kind of switching through stocks here, but we're going to get back over to Tesla here in just a minute. So I like the 700 calls because, again, it's a nice whole number. It tends to be, those big whole numbers tend to trade more volume than other strikes, especially whenever the price is obviously near that strike price. So I got the 700 calls open. You can see they're trading, you know, between $25, $26 or so. So I'm watching Tesla very closely here, right? So we see that first 1 minute candle comes down, and look at that long wick, that big hammer candle created. So it tells me that obviously buyers stepped in pretty big right here. I'm watching the second 1 minute candle. You see how it's struggling right here with that previous high of day. I'm watching this price action very closely. This is good. This is what I want to see. I don't want to see it just immediately break over. I want to see, you know, obviously some sellers and some shorts trying to step in here. And I want to see this pull back. Obviously if the low breaks, then we're going to be waiting for the 695. But if it pulls back and it holds that low and it comes back up, it's going to squeeze, right? Because right here you have shorts that are playing off of this. They're shorting into that prior day's high, and that's their risk. So if it breaks over that, what do you think those shorts are going to do? They're going to start stopping out, which is going to cause a quick squeeze effect that you can take advantage of. And that's exactly a lot of the time the type of quick 2 minute or 5 minute opening range break that you're playing. All right, so here comes our third 1 minute candle. I'm watching this very closely. It looks good. We pulled back into the VWAP. We held. We're starting to push up, and here we go. Shorts are going to get squeezed. I'm in right there. Just click the button to buy 3 contracts in at 28.55. So now I'm watching the ask and I'm watching the bid, just kind of keeping an eye on the spread and the orders actually coming through here. I clicked my button here to sell 1 contract at the ask, got filled there at 29.90. Clicking again to sell on the ask at 30.45. As we push up here, I should get filled right there. There's my order, just got filled there. So now I'm down to one contract, just like that. I'm selling again at 31.55. Boom, just got filled right there. And just like that, and only barely a little over 30 seconds, $625 on 3 contracts. So really, really good trade there. Very quick in and out. So obviously on a trade like this, when you are when you're taking this breakout like this, right? Because as I said, we see this first move down gets bought up. Okay, nice bottoming tail, looks good. Second candle here, a little bit of indecision. You saw it kind of pulled back as sellers kind of drove the price down and shorts probably piling in. Again, in terms of risk, it's great for them because that's as good as it gets. They're literally shorting right into the prior day's high, and their risk is so clear and so tight. It's right there. If it breaks, they're out. And so you have shorts that pile in off of that level. And if it comes down and it holds again and it starts to come back up, they're going to start panicking. That's their line in the sand. That's their stop. They're going to start getting out of the position. And then you get this big squeeze effect from those shorts covering, and then breakout traders like myself buying that breakout. So very high probability scalp. Now, the problem here is, like I said, that it's so early in the morning, and you have to consider that a lot of this move is probably just shorts covering. You have to ask yourself, is this move sustainable? Does the macro context support this? And in my eyes, I think I would rather see it pull down to the 695 and retest that at some point today. So I know that it's unlikely that this is probably going to continue all the way up to that pre-market high. So I don't want to be greedy with the position, and I just scale out very quickly. So just we'll rewind it one time here. Just go back a little bit because it does happen kind of quickly. All right, so we'll watch this one more time. So we see this, see how the sellers here, right? They're trying to drive the price down here, and they fail, right? It comes back up, it holds the VWAP. So now the shorts are looking at this really closely. They don't like this. Here it comes, and then they're fixing to start covering, and then boom, you get the move higher, right? And right there, you see as it comes in here, rewind that a little bit. So we'll watch the tape here. As price comes back up into that prior day's high, as those shorts start to cover, watch the tape here. Look at the orders coming through on the contracts as well, right? Here we go. Here comes the squeeze point. Squeeze, right? And look at the orders coming through here and here, right? So you have all those shorts starting to cover, squeezing up. I'm in the trade, and now I'm watching here. I'm watching the ask because I want to sell on the ask to try to get as good of a fill as I can, try to lock in, as good of profits as I can. And so I'm watching that ask and looking for that to spike up, to hit my button, again, hitting it right there. And then watching the ask again for one more spike up. So selling at 30.45, just got filled on that. So looking for a move up to 31 to sell again. There's 31.70, 31.55, and I hit the button right there at 31.55. So not bad, not bad. Very happy with that trade, and it was much needed. Now, what I want to do is let's jump back over to the daily chart and just discuss this this trade off the 695 level before we wrap up. So now I just want to talk about this trade that I was posting, that 695 level for the guys in the chat. I know one of the guys mentioned that he tried to get filled on the bid as it was coming down into the level here, and he couldn't quite get filled. And so I was just explaining that when you have something like this coming into such a key level, especially when it just whips down there really quickly, what I like to do is I have the bid and ask lines set up on my chart so I can see where the bid and ask is actually moving around in real time. And what I'll just pull that up and show you real quick here. So you can see these brown lines here, they're marking where the bid and the ask are. And so when you see those kind of move down into the level, that's usually whenever I'll execute the trade, is as those are coming down into the level, I'll just hit the ask and just get into the trade. And obviously when we do that, we're doing that without confirmation. If we're buying into this very key level, we're literally buying as price comes into it without waiting to confirm that price is going to hold it. So you basically have two options in a situation like this. Knowing that it's a very key macro level that is most likely going to have some type of a reaction off of it, you can either take the trade into the level literally as it's coming down into the level, and you just have to hit the ask. You just got to get into the trade, or else you're going to risk missing it. But you either take the trade as it's coming into the level, and you have less risk really, or you take the trade after it confirms. and everyone's different. So for me personally, especially with options, I'd rather buy it into the level knowing that you're most likely going to get some kind of a reaction off of it. And so the idea is that you buy into the level and then you sell some on this quick reaction up, right? So that basically removes some risk. In case it comes back down, you basically will probably have a flat trade on your hand or a minimal loss. But if you wait for it to confirm that it's going to bounce, now you have to wait for the proper trigger on this. And we formed this really nice hammer candle here. So your trigger is going to be breaking over that high, right? So you have this pull down into the level, you get bought up, and then as soon as the next candle comes up, if it puts in a new high, that's your trigger to get into the trade. Now the problem is that you have to risk all the way down here. So you're getting in here and risking all the way down here versus, you know, buying here. Now, how do you risk if you buy into that level? Well, basically what you're going to have to do is you're going to have to risk just underneath the level, and you have to anticipate that, okay, so if you buy into this level, if price goes straight through the level, it's most likely not just going to keep going down, right? What it's going to do is it's going to break the level and then it's going to come back up into the level. And you want to see, does it actually reject and come back down lower, or does it come back over the level? Does it reclaim it? Maybe it comes down, holds it as support, and then goes higher, right? So if you bought into the level here and price comes down underneath the level, don't just immediately panic out of the position. Now, obviously, if it keeps falling, you have to get out of the position. But the odds favor that when it does break through a level, it's going to come back up and back test that level. And when it does, that's where you have to make your decision on whether to get out of the trade. If it rejects and starts to come back down, you know you got to get out of the trade. However, if it comes back over the level and reclaims the level, that's very bullish, right? The fact that it overshot the level probably brought in some new shorts that chased it down. We'll now see those shorts getting squeezed out as it reclaims that level. So for me personally, I like to buy into the level, but not everyone likes to do that. So you basically have two options there. You can wait for it to confirm, or you can buy into the level. But I get asked that a lot. How do you risk if you buy into the level? Well, again, you're playing the odds. It's all about the odds, right? So if you buy into the level, you're anticipating that if it breaks the level, it's not just going to go down another 100 points or something. It's going to break, and then it's going to have to come back up and retest that level. And when it does, it's going to give you an opportunity to get out of the trade, you know, up here versus way down here. Okay, so just to give you an idea, and if you still find that you're having trouble taking trades into levels, or even after waiting for confirmation, then you're probably thinking about taking too much size. So what you need to do is you need to just size way down. You need to take such small position size that you honestly don't care about the money, whether you lose it or not. And then that will allow you to just take the trade, because at the end of the day, when something is coming into a very key macro level like that, you just have to take the trade. That's all there is to it. You just have to take the trade, and it either works or it doesn't. The other thing that I would mention that we were talking about in the chat room today is that you need to be hiding your P&L. Whenever I'm trading, you'll notice in the video when we were watching that, you couldn't see my P&L. You could see my orders, you could see my position and my cost basis, but you couldn't see the P&L when I was in the trade. Only after I closed the trade did I look at the P&L. So I had no idea how much I was up whenever I was in the trade. And when I looked afterward and saw that it was over 600 bucks, I was like, wow, nice, that's great. But I didn't know that at the time. And if I had seen that, what it can do is it can invite those emotions into your decision making, and you might end up selling too early because you see that you're up nicely on the position. Or if you're red on a position, but you're within your trade plan, you might get kind of scared and think, oh man, I'm going to lose so much money. It just really invites emotions into your trading when you can actually see that red or that green number. So I just find that it's better to hide the P&L, and it's going to be difficult at first, but once you get used to it, you're going to find that it becomes a lot easier to trade the chart and the price action and make your decisions solely off of that and not what your P&L is telling you. So hopefully that's helpful. Like I said, the most important takeaway, guys, is that when you have something coming into a key level, you just got to take the trade, and you either take it into the level or you wait for it to confirm. But you just have to understand that if you wait for it to confirm, that you're going to have more risk, right? Because you're going to be buying higher, and so you really have to risk off of that low. And that's all there is to it. So you just size appropriately depending on your style of trading. All right, guys. So again, hopefully you enjoyed the video. I'm sorry that this month has really been not that much exciting things happening in terms of trades. I've only had a couple of really good trades, otherwise mostly just small little nicks and dings here and there. The good news is that I've kept my risk really tight, so my losing days have been teeny tiny, and I really haven't had that many big wins because I haven't had a lot of follow through on the trades that I have taken. Today worked out really well. You know, I had another one this month. So, you know, like I said, I'm up like $2,000 on the month. I can't complain, but it's not where I'd like to be. So, you know, hopefully things improve. We'll see. But the market is ebb and flows. You just have to take what it gives when it does give it. All right, guys, hope you have a great rest of your week, and I will see you guys in the weekly watch this video on Sunday. All right, take care.